All right, so uh, ready to dive into all this market madness.
Always ready to jump in, especially with everything going on this week.
Right. This analysis from the smart investor you sent over, it really paints a picture, doesn't it?
Yeah.
All this stuff happening with politics and those tech stocks, man, they're all over the place.
Yeah, no doubt about it. It's a wild time to be watching the markets, that's for sure.
So let's break it down.
Yeah.
First up, this whole S&P 500 thing, it's been kind of hovering around these 150 and 200-day moving averages. What's that telling us?
Well, for anyone who's maybe not, staring at stock charts all day long,
Right.
when the S&P 500 gets stuck around those averages, it's kind of like the market is just holding its breath.
Holding its breath.
Yeah, like it can't decide if it wants to go up or down.
Right.
And that makes investors nervous, right? Like, which way is this thing going to go? Bull market, bear market, nobody really knows.
So it's not so much like understanding moving averages in general. It's more like what this particular, little dance around the averages is telling us about right now.
Exactly. It's a big flashing sign that says uncertainty.
Uncertainty.
Which is probably why that analysis, it's leaning towards index funds right now.
Mm-hmm.
It's like hedging your bets when you don't know which way the game's going to go.
Okay, that makes a lot of sense. And speaking of uncertainty, this analysis, it also mentions using stops.
Right.
Especially now when things are so shaky. Could you maybe quickly explain what those are for anyone who might not remember?
Sure. Saying stops are basically like your safety net in the market. It's an order you set that automatically sells a stock if it drops to a certain price.
Oh, I see.
So, let's say you're holding on a Tesla stock and it's sitting at, let's just say $250.
Okay.
You could put in a stop loss order for, let's say, $240. So if it dips down to that price, your shares automatically sell.
Oh, that's smart.
Yeah, it helps you avoid those big losses if a stock just keeps on falling.
I like that safety net analogy.
Yeah.
Okay, so stops, good tool to keep in mind in a market like this?
For sure, especially now.
So we talked about market uncertainty, but we got to talk about the elephant in the room.
Yeah. Which one?
Politics.
Oh, right, yeah.
I mean, the analysis is pretty clear about how much those, political events and global tensions are adding to all this volatility.
Well, yeah, think about it. Whenever there's some big political surprise, some policy change or some conflict overseas, what happens?
People freak out.
Investors freak out. Exactly.
Yeah. Right.
And that can send the market, swinging wildly.
Okay, so let's say you're not, a political expert.
Yeah.
How do you even begin to navigate this?
You got to lean on technical analysis. It's like reading the signs, Understanding those charts, those indicators, recognizing those patterns, it helps you cut through all the noise and make decisions based on, the actual data, not just your emotions.
Makes sense. So, okay, we've got this kind of crazy, uncertain landscape. What's the analysis actually suggest for, approaching this market?
Well, it lays out a couple of paths.
Yeah.
First one is kind of playing it safe, focusing on those indices like the S&P 500. The idea is to buy in when they dip below that 200-day moving average. Think of it like, getting a discount at a big sale.
Ah, okay. So you're waiting for the dip and then hoping to ride it back up when things settle down.
You got it.
Okay, I like that.
The other approach is a little more cautious, especially with individual stocks.
Right.
The analysis is basically saying hold your horses, wait for some stronger signals before jumping in headfirst.
Yeah. Trying to time the market when it's this volatile. It feels like playing with fire a little bit.
A little bit, yeah.
Okay, so let's talk about some specific companies that the analysis mentions. Apple, it's always a big one. What's it saying about where Apple's at right now?
So right now, Apple is trading below its 200-day moving average.
Yeah.
And usually that's seen as, a not so great sign. It's like a little warning that the stock might keep going down. But the analysis also says if Apple manages to break through that resistance level, it could actually be a good time to buy.
Interesting. So it's kind of like a wait and see with Apple.
Exactly. Keep an eye on it.
Okay. What about Tesla? That one always seems to be making headlines.
Oh, yeah. Tesla's always doing something.
Right.
So the analysis is showing that some traders are moving away from, those long-term holds on Tesla.
Mm.
They're switching gears, trying to buy low and sell high within these price swings.
Oh, wow. I always wondered what kind of person is comfortable doing that kind of short-term trading. It seems so stressful.
It definitely takes a certain personality. You got to be able to make those quick decisions when the market jumps around.
Right.
And be okay with the fact that, you might lose sometimes.
Yeah, not for me.
But it can be really profitable if you know what you're doing.
So what do you have to know?
Well, you got to really keep an eye on those support and resistance levels. It's like those price floors and ceilings.
Oh.
That's how you know when to buy and sell.
Gotcha. Okay, so then we have Palantir. They've been getting a lot of buzz recently. What's the analysis saying about them?
Oh, this is where it gets interesting. So the analysis is pointing to some breakout signals with Palantir.
Breakout signals.
Yeah, basically it's saying that the stock might be ready to make a big move upwards. And the analysis suggests that using moving averages could really help pinpoint the best times to buy and sell to make the most of it.
I like that using moving averages not just to spot trends, but to like actually time your moves. Can
Okay.
you give an example of how that works?
Sure. So let's imagine that Palantir's 50-day moving average crosses above its 200-day moving average.
Okay,
That's usually a good sign, a bullish signal, if you will.
if you will.
It suggests an upward trend. So that could be a good time to consider buying in.
Right.
On the flip side, if the 50-day dips below the 200-day, that might be your cue to sell. Lock in those profits or, avoid potential losses.
Okay, so using the moving averages is like guideposts to time your trades.
Exactly.
This whole conversation is making me feel like volatility is the key word this week.
It really is. And that's why the analysis stresses the importance of using volatility indicators.
Okay, what are those?
Basically, they help you understand how much a stock's price is likely to swing up or down. Gives you a better idea of the risk involved.
Oh, so like high volatility equals bigger price swings, potentially bigger wins, but also bigger losses.
Exactly. And in a market like this, being able to adapt is crucial. Don't be afraid to switch up your strategies as things change.
Great advice. So any final words of wisdom for our listeners out there who are trying to make sense of all this and make smart decisions?
I'd say the most important thing is to never stop learning. The markets are constantly evolving. Staying informed through resources like the Smart Investor is crucial.
Absolutely. So it sounds like this week is all about managing risk.
Hmm.
Maybe playing it a little safer with index funds
Yeah,
when they dip below that 200-day moving average.
definitely a solid strategy.
But if you're going to play the individual stock game, got to be sharp. Got to understand that technical analysis.
And don't forget, all this technical stuff, it's a tool. But at the end of the day, you got to factor in your own personal goals and your own risk tolerance. So true. Okay, so here's something to think about. How do you find that balance between, trusting the analysis and trusting your gut when it comes to investing? Something to ponder.
Definitely something to think about.